Welcome to the Matt Waller Podcast, sponsored by NewRoad Capital Partners, where we look at success at the intersection of technology, logistics, supply chain, retail, and CPG, which we also call the retail value chain. I want to clarify that this podcast is distinct from my responsibilities as a professor in the Sam M. Walton College of Business. Nonetheless, it aligns with my aspiration to provide practical insights to professionals in business by showcasing companies and people that can enhance your ability to manage, lead, strategize, and market effectively in the retail value chain. Before we dive into today's exciting episode, I'd like to take a moment to express my deepest gratitude to our founding sponsor, NewRoad Capital Partners. NewRoad Capital Partners invests in proven and innovative technologies, products, and services that serve existing and unmet needs in the marketplace. NewRoad partners with growth-oriented companies in supply chain and logistics and innovative consumer companies. As experienced entrepreneurs and operators, the NewRoad team prides itself on the high level of collaboration it brings to each of its investments. NewRoad's team of investment professionals and operating partners have deep, relevant investing and operating experience, including significant experience leading large divisions of enterprise companies and building businesses from scale to concept to realization. To learn more, visit newroadcp.com. I also want to disclose that I'm an advisor to NewRoad. I would like to take this moment to recognize podcastvideos.com for being our provider of podcasts. Their mission is simple: to streamline the process of creating podcast videos. They're equipped with industry-leading equipment and streamlined processes, and their studio and services save you time, money, and hassle. I'm very pleased with the services they provide me. Now, without further ado, let's get started with today's episode. I'm so excited about this interview today with Stefan Sterns because he has extremely great experience at Barclays Investment Bank in New York, where he most recently served as Director of Communications and Media Coverage Group, focusing on mid and large cap media companies. In this time, he worked on the buy side and sell side M&A advisory assignments and debt and equity capital raises in excess of $200 billion. And I'll tell you a bit more about him later, but I really think you're going to enjoy this because, I talked to him about lessons he learned in his 8 years, almost 10 years actually, in investment banking, and specifically about the media sector. We get into talking about some new sectors like retail media networks, and we talk about his experience in investment banking versus private equity, and also the fact that he spent most of his life in New York City, and now he lives in Bentonville, Arkansas. He also has an undergraduate degree from University of Pennsylvania, an MBA from Columbia Business School, and we see people in Northwest Arkansas moving from all over the country and all over the world here. We talk a little bit about that. We talk about the retail value chain and how there's a lot of opportunities in that space for investments. And we also talk to him about what he's most excited about in the coming years. What are the challenges that they're facing right now in making decisions, and how do they source investments? These are all very important questions. Currently, Stefan is a partner at NewRoad Capital Partners, and where he's primarily responsible for identifying and analyzing investment opportunities, leading deal execution, and the management of portfolio companies. I think you're really going to enjoy this. I think, if you're interested in the retail value chain, meaning logistics, supply chain, retail, consumer goods, technologies associated with those, I think you'll be interested. If you're interested in investments, particularly private equity, then you definitely should be listening to this. So I think you're going to enjoy it. Stefan, you have an amazing background, and you were at Barclays for 8 years. And what are some of your most valuable experiences from that time?
It was a long 8 years, so I had a lot of experiences, but I think back on that time, what I most remember from the day in and day out was the opportunity to work with really smart and motivated people. And so, I think that's what kept me there as long as it did. And honestly, investment banking, particularly out the gates, post business school can be a bit of a grind. The hours are long. And it's sort of, it's known as an industry that churns through people. But ultimately, I found the people that stay, past their sort of associate years, and I stayed through my associate years, through VP and into director, is you find good people to work with that are smart and that you enjoy your day-to-day with. And so, I can think of individual deals I worked on, and I got a chance to work on some really big deals there. Some $130 billion deal. I got the chance to work on a $70 billion deal. And all that stuff's really just numbers, right? And deals.
Those are big deals.
They're big deals in the scheme of investment banking, but at the end of the day, deals are deals, and there's a whole process to them, and you got to go through all the steps, whether it's a $10 billion deal or a $10 million deal. But the most rewarding piece of it for me was finding a good group of people, guys and girls I worked with day in, day out in those deals, and got to learn from. And so it's an industry that has a reputation, but the people that are in it are, dynamic for sure. And particularly at a large bank like I was at Barclays, that offers so many different types of products and services, you can stay there for a long time and continue to learn. You're not just doing the same type of deal day in and day out. Every company you work with has different needs. So
it's interesting. One of the first things you brought up were the people you worked with, motivated, smart people. And boy, that's true in everything in life. When you're around people that really want to accomplish something and they're willing to put in the time and effort and they're enjoyable to be around, life is so much better, especially if you're doing something that takes a lot of time.
I agree. Yeah.
Well, you also have extensive experience within your investment banking years and the communications and media sectors. What are some of the innovations or trends that you witnessed over that time frame?
Yeah, so I'd say the biggest one that comes to mind is the cord cutting, right? So we were servicing large diversified media companies, and the cable as a system and a pay model, emerged in the 25 years was the cash cow for a lot of these companies, right? It was an incredible cash cow that just continued to grow and grow and grow as different networks continued to add channels and got paid for them. And as us as consumers, we're on the receiving end. Everyone who's been paying for their cable bill watched it grow, in one direction for decade after decade. And then all of a sudden, with the arrival of OTT and the ability to deliver video without a cable box, that model got turned upside on its head. And so the cash cow for these companies was under direct threat, and it wasn't they themselves, like is often the case, that were disrupting the model. It was outsiders, right? In the early days of Dish and Sling, and now YouTube TV sort of emerged as a Google-owned entity. Obviously, has emerged as a leader in the space, but not you got Netflix, not even cable, right, and just ad-free programming, Hulu, and all these other different animals that just didn't exist. And so that was decidedly one of the enormous challenges that the big, large incumbents were up against. Obviously, the advent of the smartphone is a piece of hardware, and then the software that came with that fundamentally disrupted a lot of different types of media, but also brought around new industries. So I think of those two as probably, we're all familiar with them because we touch those in our day-to-day, but those are two of the largest that we were definitely facing on a day-to-day basis.
Well, along those same lines, and maybe going deeper on the subject of M&A, I mean, as someone who has experience leading over $200 billion in M&A transactions, What would you say are some of the key elements of a successful M&A deal?
Good question. Every M&A deal. First of all, let me quick clarification. Leading would be be negligent for me to say I led every deal. Those are the firm we led, but these are massive undertakings for an investment bank. Like I think of, when we did the Verizon wireless deal with Vodafone, which was the $130 billion deal. I mean, that brought in 100 people from the firm.
Sure.
But, extraordinarily complex deal, and particularly extraordinarily complex capital market raise. But, when I think of M&A and what works and why it works, both in execution and post-merger, it's pretty much fundamentally based on high value, quantifiable, executable synergies. And 90% of the time, that's going to be on the cost side. And so it sounds basic, but you would be surprised how many M&A deals are put together with other grander ambitions that you can't really point your finger on exactly how this is going to return value and in what time frame and what method. These two brands should go together. They'd make sense together. Why wouldn't we bundle this and sell it to the customer versus you have this asset, I have this asset, I'm supporting it with this cost structure, you're supporting that cost structure, we put it together, we can remove that and immediately, create, real value that passes down through the bottom line, then returns to shareholders. So all good M&A is based off of cost synergies. Yeah.
So, shifting gears a little bit here, you have this background in investment banking, and now for several years you've been involved in private equity. What attracted you to both banking and private equity, and what do you enjoy most about your work now?
I first was attracted to investment banking because I liked the energy and the execution of doing deals. And say what you will, maybe I had a shorter attention span than I needed to at the time, but I liked that you could put together a deal, advise on it, get through it, and there was there was a reward at the end. You close the deal, and it felt like a sense of accomplishment. But in executing those deals, you become a master not in the understanding of how businesses work, but in execution, like merger execution. So your value add to the transaction is shepherding, that deal from point of idea through completion. But then you're hands off, right? You'll stay with the company. You'll probably, remain a trusted advisor to the company, but you're never going to be like inside the company, right? That's not what they're paying you for. And that's not really where your value is. That's their expertise, right? Much like when you go to sell a house, you've probably sold maybe one house in your life, maybe 0 houses, but the person you're working with has sold thousands. And so that's where you come in and that's where you leave. What I'm enjoying most about private equity is that once you do the deal, that's really sort of the starting point, and the real work comes post-deal, and it comes in those next several years. And that, for me, has been both an education but also rewarding, because I've had a chance to work very closely with management teams in a role where I didn't in my role at Barclays, and particularly with companies at the stage where we're investing, which I sort of qualify as lower middle market. These companies are facing existential questions day in, day out, right? The future success of their business is directly tied to the decisions they're making this year. Whereas, investment banking at Barclays was focused on large and mid-cap companies, multi-billion-dollar companies. They face some existential questions, and usually if they're doing a merger, it was a very big deal. But the products they had, the services they offered, those were pretty well established, right? And there was a marketplace for them, and they had competitors, and they knew who those competitors were. And companies we're working with now, you've got a product, and you're either going to win or lose based on the next 24 months of your ability to execute against how you see the market, and with the team that you have to execute. So that's been exciting.
Well, one thing that has occurred to me, especially, I know that this is very different, but you do have a lot of experience in media, and this is different than that, but it's similar. in some ways, this growing field of retail media networks. It's one of the areas that it's very nascent, but it's unequivocally going to grow into a massive business. We're still so early in retail media networks that we really don't know exactly where it's going to go. One thing that's interesting is there's a lot of firms, retailers out there that have their own hundreds of retail media networks. And when you look at a CPG company, they can't support all of them. I mean, it's just not going to be possible. At least I don't think so. Unless, again, it's interesting to know what kinds of technologies might be on the horizon. Are you very excited about that from a private equity perspective?
I am for certain. And that's largely a product of sort of where we sit geographically. We're in Bentonville, Arkansas,
right,
which is home of the largest retailer in the world. And then also it's a product of some of the team members I have a chance to work with, right? Our operating partners at NewRoad. We're former EVPs at Walmart and global brand presidents at Starcom and others. And knowing what they experienced and knowing the opportunity for the retailer and somewhat the challenge for the CPG companies, anytime there's a new industry, people are still trying to figure it out. And when people are still trying to figure it out, that means there's opportunity for new technologies to help them, which in turn makes opportunities for folks like us to find companies, invest in companies, and help those companies figure that out. And so, given the bench of talent we have who knows how it works inside those retailers and those brands, we're optimistic that we'll be able to find, probably one, maybe two investments in that space that allows us to, take advantage of that. But it is very nascent. So I'm studying, I think, probably much the way you are. And I don't know how it'll all shake out. But where there's challenges, there's opportunities. So.
Absolutely. One thing that I had thought of, and by the way, if you're listening to this, we're really having a conversation about this at this point. No one knows the answers to these things, so we're just talking about it. But informed discussion, if you will. We've all been involved in research on this. But, one thing I always think about in nascent industries is what is the problem? And one big problem is that, consumer goods companies don't know how to deal with this. Where should they invest? I see that as a problem that needs to be addressed somehow. And, I've wondered, is there a solution to this that's kind of like a market-based solution? I don't know.
I don't know either. I mean, we've looked at some companies to date that are sort of just trying to put themselves in the middle of it all and sort of be the facilitator to allow that online and offline ad inventory, come to life. As this is a higher margin business than the retail business. So if you can add this to your, income statement, like has a material impact. Where you find those dollars in the CPG, I think is still being navigated, but there's no question that, if you've got the footprint, the customer relationships, the customer data, there is a way to engage with the customer as a retailer and to monetize that. And so I don't know if it's a marketplace, but there are currently softwares in other advertising sectors that serve as digital platforms, allow you to buy ads across channels. And so if you can take this inventory, which is still sort of being built up on a bespoke basis, and make that inventory available to advertisers who are launching campaigns and just haven't thought to put this, tap into this channel because it's a nascent channel, bringing that online is necessarily an opportunity. So, yeah.
That's a good point. It makes me think there's probably some existing technology out there that maybe isn't perfectly designed for the old approach, but with retail media networks, maybe this new phenomena would close the gap for them in terms of the application of their technology. We saw that so much during the dot-com boom back in the 90s when there were all these technologies that were created at the advent of when the internet was, when the World Wide Web was nascent, that later we realized, oh, this is a great application for whatever the business is. But it took years to really see some of these things.
Yeah. If I could tell you the timing evolution, we'd be in Vegas right now. So
it would.
Yeah.
Maybe we should do that. I don't
know.
But there's so many trends that are at a confluence here. Because if you look at like the omni-channel approach with buy online, pick up at store, you're talking about disruptions in industries earlier. And one thing that came to mind, and part of it, again, is this podcast is focused on the retail value chain, as you know, which is about supply chain logistics, consumer goods, and retail, and their overlap. But Walmart, even though they're the biggest player, they really have been a disruptor in this way because they were creating buy online, pick up at store before the pandemic. During the pandemic, it was obvious that it was a brilliant move. They weren't doing it for that purpose, but now you realize, oh my gosh, thank goodness they did that.
I find I mean, this is a personal view. I'm not saying it's right or wrong. It's obviously had some success. I find it fascinating that they endeavored to, and in some ways have, changed the customer behavior. They had to teach them to buy online, pick up in store. That is not a natural phenomenon, and it just given their presence, and we all know the stats, 90% of the country lives within 10 miles of Walmart. If anyone's going to sort of, make that available and sort of quote unquote train the customer, it's going to be them. But not a lot of people have made a living telling the customer how to shop or behave, but obviously they had the data that supported that it would work, and then certainly the pandemic served as a catalyst. But it'll be curious to see how that evolves versus continued sort of shrinking of the last mile delivery windows.
Right.
I know I live half a mile from a Walmart, and I've got Walmart Plus, and I could have it delivered. I could have it buy online, pick up at the store, but I still go in the store.
Yeah.
But
right.
I also buy a lot of stuff online. So I think like a lot of problems, the answer is you got to, multifaceted. It's not just everyone's going to do one thing. You got to have everything. And it sounds like a cop out, but customers want everything everywhere all the time. And so it's new for a year or two, and then it becomes brass tacks. You have to have it, right? Meet them where they are. And they're all not in the same place all the time. So,
I remember I was working on a project with an alum at Walmart, and at one point he said, I've got to discontinue working on this project. I'm called into a new project, and it was buy online, pick up at store. And back then they called it grocery pickup.
Mm-hmm.
It was before they expanded it. But I thought, oh my gosh, this poor guy. I don't know if this is such a good deal, It's like, who's going to do this? But one of the first experiments they did with it was, I believe, in Denver, and they found out that a single parent with children, they may have shopped at 2 or 3 grocery stores per week, but as soon as they tried buy online, pick up at store, then that's all they wanted to do.
Yeah.
Because it's so much easier. If you've got little kids with you, it's quite easy to just pull up into a space and have someone put it in your trunk.
This is an anecdotal, but or a side, but I moved down to Bentonville, Arkansas from New York City, and so I had owned one car my entire life before moving here at the age of 37, and really didn't have like a ton of drive-through experience. And I've always marveled since I got here, is that you can pull into a drive-through, and there can be 10 cars, and then you look inside the restaurant, there's not a single person at the counter, and everyone just doesn't want to get out of their car. Convenience is king, and they just want to stay in their car no matter what. So, and that's probably with kids too. I've got 2 little kids. Getting out of the car with kids it's going to add a lot of time.
Well, yeah, and you've spent most of your life in New York City. What year did you move to Northwest Arkansas?
December 2019.
Yeah. So right before the pandemic.
Exactly. Yeah.
What a change. And what a good time to move here.
Yeah. Yeah. Obviously did not know that was coming, but it turned out to be a very good decision.
But that is a big change. I know your wife is from Kentucky. So this is not too far from where she was from.
Nope. No, for her, it wasn't as much of a stretch, but she did, grow up in Connecticut and had spent the last decade in New York City. But, Bentonville's community is multifaceted. And I know it's one thing to say, but I think just of my friend group here and, the people we've met through schools and otherwise, and you've got folks from all over the country moving here. And I try to tell my friends back in the Northeast, I was like, it very much feels like the first semester of college where everyone's sort of from somewhere else and meeting people and introducing themselves. And, you strike up conversations. And obviously some of that is Southern hospitality, which I wasn't, familiar with, but I'm enjoying. But a lot of that's just, people who are from somewhere else and just sort of keen to, meet new people. And I think that sort of extends into the business ecosystem here. You've got a lot of suppliers are coming down here for 2 years. They're trying to integrate. Maybe they've got families, maybe they don't. They're away from where they typically were. They may be going back, and they still are looking for some community. And so I think you've got a level of sort of curiosity. And then you also heard someone describe this well today, like there's a level of trust in the business community here. And I'm still trying to figure out where that comes from. But it's a great thing to have if you're trying to get things done.
No kidding.
Trust facilitates a lot. And so when there's, plenty that breeds trust because people aren't worried about, things being a zero-sum game and the area is growing and, Walmart's doing well and Walmart's growing and J.B. Hunt's doing well and Tyson's doing well. And so it's a good energy. Yeah.
Yeah, I wonder. Now, of course, you being at NewRoad and NewRoad being focused on the retail value chain, and most of your investments have been in supply chain logistics, but also some other areas related to that, including media and consumer goods types of companies. But Northwest Arkansas has what I would characterize as the highest density of expertise in the world in the area of retail value chain.
Mm-hmm.
And so there's lots of competence. You were talking about trust, and I think back to this article I read a while back. It was an academic article kind of looking at what are the variables that really build trust between businesses and organizations. And there's 3 things. One is that you have competence. 2, that the other side believes you have their best interest in mind. And then the third one is that you will do what you say you do. Mm-hmm. Integrity kind of a piece of it. And I wonder sometimes, our community, although it's growing and there's abundance, there's so much value being created here in so many ways. And a lot of early stage companies are popping up around here. Way more than, if you would have told me it was going to be like this when I moved here in 1994, I wouldn't have believed it, But it is happening. But I wonder if some of it is, people really have a lot of competence here. I know as a professor over the years, I always liked it when our students at least did an internship or took a job at Walmart, because Walmart's so good at giving you lots of responsibility. Mm-hmm. A lot of times your first job, you're doing something, but you don't have real responsibility. But, at Walmart, you really do.
Yeah.
And sometimes it's massive. And I know sometimes when I meet these young people who I had in class a couple of years ago, and they're managing $1 billion worth of buy, it's like, it's hard to believe.
Yeah.
Yeah.
I think of our team members, and I think of the experience a lot of them have at these very senior enterprise, leadership roles, and many of them are former Walmart executives, some J.B. Hunt, but I sort of want to attribute that humbleness to the region, maybe it's some Sam Walton DNA and otherwise, but, these are like the top echelon of operations of companies.
Yes.
And, from New York, I don't know if I'd see people in those similar positions with the same sort of humbleness. And I mean, the DNA of Walmart, goes into everyone here, and it seeps in everyone in some way. And that frugality and that, modesty of living and whatnot. But, maybe some of it's definitely that. And then I think there's just, maybe it's, the South, or there's a willingness or eagerness to, help others and teach others. Almost like there's more time in the day for that. Whereas in New York, it felt like everyone was running out of time every single second. And if you weren't, if there wasn't a clear sort of return on my investment of time in this moment, and maybe you sort of start questioning, is this time well spent? So,
wow, that's an interesting insight. We know you are unusual, but there's more and more people, as you've said, that are moving from all over the place here. I know my neighbors are from literally all over the country and the world. So you spent most of your life in New York City. You've lived in almost every neighborhood in New York City and Manhattan.
Yeah.
And you're also an alumnus of both the University of Pennsylvania and Columbia Business School, where you got your MBA. Would you mind telling us just a little bit about how your academic experiences influenced your approach to the world of finance and investment?
Yeah, sure. I went to undergrad at Penn, but I didn't study finance there, so I wasn't in the Wharton School. That sort of interest in finance grew out of the first role post undergrad, in which I was working at in media at a company that had just raised $1 billion of capital, and we had investment bankers in our office every second to help us raise that capital, but then to do a bunch of deals that we did after that. And so I sort of got turned on to it through that lens. And then honestly, there's just energy in New York within finance, like it is the dominant sector.
Sure.
And so, much the way people in this town talk about, container shipping and, and less, LTL and, TEUs and all the, every other variable under or acronym under the sun. You're talking finance. Like that's the sort of, what you hear in the street. And so I got visibility into, that one through, work, but also I had a lot of friends who had gone into the industry. And so then I made the transition to banking through Columbia Business School. And my education for, specifically in finance started really there. And I joined at a unique time. I started at Columbia in 2009, right?
Right after the Great Recession.
Yeah. And so...
Yeah, because I think the recession officially ended in June of 2009. So I think...
Yeah, stock market low was March 6th or 9th of 2008 or something, right? I think. Or maybe it was 2009. Regardless, it was right then. Lehman Brothers collapsed. Barclays actually bought Lehman Brothers. Barclays didn't have a U.S. investment banking presence really in any real capacity. They just picked up Lehman the next day and, took everyone, all 10,000 employees with them, and just changed the color of the carpet really. But the education, for me was through business school and then, through my network. But Clem's got a great finance program. They always have. It's one of the sort of feeder schools into finance. It's based in New York, and particularly sort of in that time, we studied a lot about the financial collapse. And so it's interesting here as we sit, probably, we're definitely in a correction, certainly within the venture capital space from the highs of where we were 12 or 18 months ago. and I work alongside, team members who, for no fault of their own, has spent their entire career in a boom, right? And
Yes.
and it's a funny place to grow up, because it's not reality. 0% interest rates never were a reality, and certainly extended 0% interest rates haven't been a reality, nor should they be a reality, really. But that's where we've been, and if you grow up in that, you can only help but sort of have that influence how you think about investing and how you think the world sort of ultimately shakes out. But I was in New York during the .com crash, and I was in New York during Great Recession, and so I sort of have a little bit.
And 9/11.
And 9/11, yeah, and then so you have all those things, and you understand that this is like every industry, it's cyclical. Everything's cyclical. So,
I had a venture capital based backed software company in the late 90s, early 2000s, and I remember we were closing our biggest deal ever on 9/11.
oh no,
And everyone started leaving the meeting, and I didn't know why. And but after that, everyone put their IT budgets on hold, and we really, our sales went down fast. I think I laid off half. We were up to about 120 people by that point. I think I laid off half of the people by December.
well,
And to your point, I mean, I got into that business during growth that was unfathomable.
yeah, that late 90s growth was,
And it was easy to raise money. I mean, I remember literally the first presentation we made, we got $2.5 million. It was 1998. And I thought, well, this is not so bad. Little did I know. And then we raised 7.5 and then 20 on the third one. And then not long after that is when everything came crumbling down. And we were so focused on planting the flag in that particular space. But it really is, to your point, it's good to have experienced some ups and downs.
Yeah, it's never as bad as you think it is, never as good as you think it is.
Yes.
And so staying level-headed, I think as an investor, is one of the hardest things to do, both in the, when things are going great, don't drink your own Kool-Aid, and when things are going, badly, the world's not falling apart. It's so, and you literally, you almost have to write it down or put on a note in your desk or get a tattoo, but you can't get too caught up in the swings. And so, where we are, and it's the way that, companies should always be thinking is you've got capital, and that capital is, you've got to almost treat it like it's going to be your last capital, right? Like you can't be just reliant on the market for the next raise. And so, you've got to think about the top and bottom line. And certainly I think the industry as a whole, lost focus of the bottom line without a doubt for a couple of years there. But I'll tell you what, right now that is definitely on everyone's mind. I mean, extending runway, being unsure about what the capital markets look like at any given moment is keeping a lot of CEOs and boards awake at night.
To that point, the investment landscape in so many different dimensions is constantly evolving. And how do you stay up to date with industry trends and developments?
You mean within investments, like in structuring and things like that, or more just with the, how do we find source deals?
Source.
Okay. Yeah. Look, sourcing is legwork, right? You got to take that nth meeting. You've got to, track your companies. You got to figure out where they are. You got to meet them before others do. There's just a level of blocking and tackling that needs to be done, which I sort of just good business practice managements. Yeah, we've got our own CRMs. You're out there identifying companies early at conferences, through online research, through our own networks of other investors that we partner with, that we like, that may come a stage earlier than us, who feed us deals and say, hey, this is not a deal that fits us because it's grown out of our size threshold, but would fit you, and we know that you guys can add value, so we'd love you to look at it and potentially be on the board. That is brass tacks for being an investment firm. Like, you have to do that, and you have to do it well, and you can put resources against that, myself included, but we've got a team that is well oiled at this point, that's doing that day in and day out. You don't want to miss the next Airbnb, right? But the other piece that I think is unique to us is that we've got this operating partner model. So they keep talking about these guys and girls with long storied careers, and they've got their own networks that they bring to the table, and through those networks they have deal flow that they share with us, that we may not otherwise see, because they might have a relationship with someone who's inclined to share an investment idea with them earlier than sort of bringing it to the others, others who are just maybe other firms that are more just pure investment firms, right? Not necessarily having the same value add expertise. Also, I would say what's most important, like anything in life, is focus. And so if you know who you are, sourcing's a lot easier than if you don't. Because if you don't, everything could be a good investment. If you do, it allows you to, not go a mile wide and an inch deep, but rather, really understand a sector and then identify all the potential companies and opportunities in that sector. And so where I feel fortunate in my role, which is in a firm without our level of operating expertise, is my job is more difficult, because I've got to identify the subsectors, write the thesis, and make a bet on that sector. Where I get to do now is look to 150 years of operating experience and say, hey, what's broken, what needs fixing it, what's changing, and then from there, we that starts us off from a sector focused perspective, and then we can dig deeper and figure out, okay, those parts are broken, people are trying to fix them. Do we believe that the solutions that are coming to market now are the right ones, and is this industry going to get quote unquote fixed in the next, or this problem able to get fixed through technology over what is our investment horizon, which would be sort of, typically 5, 6, 7 years max. So, but gosh, that's a tough job to do if you're just reading white papers and you haven't spent 30 years in industry. So,
yeah, well, that is something really interesting that intrigued me about NewRoad, was just the people you have as operating partners, as well as in the financial area, but the operating partners having the focus on the retail value chain. Someone like Chris Soltemeyer, who was EVP of logistics globally for Walmart. Really, I don't think there's no other company with more logistics breadth and depth globally than Walmart. That's a private company.
Yeah. No, they ship 3 times as many goods as UPS per day or something. There's some.
And also, I think the innovativeness that comes from all of that experience as well. But looking ahead, what are you most excited about in the coming year or years
in the investment landscape? I'd like to figure out, where the bottom is here, right? This market, I think we've got this, the public market's obviously been doing all right, the last couple of quarters. I would love a little bit more sort of normal times, if you will. I'd love to figure out if, now is, timing's everything in investing, right? And so try to figure out, is this next 6-month period, and I won't know until it's really over, but is this next 6-month period sort of the right time to invest, or is there room to sort of for it to further, valuations to sort of return to more normal? What is the quote unquote new normal, right? And I don't, look, you don't have to get it perfectly right, to have a great fund and great investment. You can't get it absolutely wrong, right? If you look at what, some of the larger investors, not going to throw out names there, but who they are, like, who've had massive write-downs in their largest funds.
Yes.
In the last couple of quarters, like they were in market for, quite some time, just doing a lot of deals at pretty frothy valuations. You can't do that. You don't need to bottom tick the market, but we're still trying to figure out, is there more room for it to go out? I think that what we're seeing in the market is that higher quality companies, there's plenty of appetite still for, right? And companies that don't have the metrics that they should have, or, to warrant a superior valuation, aren't getting them. And so that starts to feel like sort of the way it should be. Good companies get rewarded, less good companies get lower valuations. That feels a little bit, intrinsically like the way valuations work. I think what's going to be interesting to watch over the next 12 months is just how many more companies, frankly, are going to go under, where there's just no market for them, right? Not like a lower valuation, but no market. And that's where, honestly, if you've got your M&A hat on, M&A often happens when people are feeling good about their stock price and, their currency is very valuable and they're buying things in shares, or they've got a heavy, big balance sheet because of, great couple of years, or because they've raised additional capital for M&A. But M&A could also happen in downturns out of necessity. And any way it happens, if it happens, stronger companies can emerge, particularly if there's a lot of, value in those mergers and on the synergy side, combine market share and cut costs. So I think there's going to be, for the smart folks out there, some good opportunities to roll up some industries and put together some companies for the next few years.
Stefan, thank you so much for sharing with us. This has been outstanding. Really appreciate it.
My pleasure. Thank you very much for having me.
If you're finding value in this podcast, we greatly appreciate your support by subscribing to our YouTube channel. Additionally, following us on Apple and Spotify and leaving up to a 5-star review would be immensely helpful. We welcome any feedback or questions related to the podcast, as well as suggestions for further topics and guests. You can leave your comments on our YouTube channel, and rest assured that I will read each and every one of them. Please also take a moment to check out our podcast sponsors, as they play a critical role in keeping this podcast running. For more information on specific topics, timestamps, or links to articles mentioned during the podcast, head over to mattwallerpodcast.com.